Traders, we are back here with another week. It is going to be the week of the 23rd of May. And we are looking at, on FOREX Factory, what types of major events that could trigger, various events. We don't like to overthink the news, but we just want to be aware of it. On our calendar, make notes of the time. The first thing I see coming about is some of the Fed minutes could be a little bit in play. I would want to watch those. Unemployment claims on Thursday, looking at that. Really, it's all playing on the strength of the dollar, which I'm really going to be paying attention to because it's really going to determine the trajectory of gold, which I trade. And it also can affect other markets as well. So we have to really kind of just have a basis of what to expect. Looking at the dollar, looking at the 10-year, it didn't do too much. Let me just make sure this is refreshed. Okay, so has not really been breaking over. It hasn't broken 2% this year, like a lot of people were saying. It's still just been kind of slow. Nothing too crazy with this lately with the 10-year, which I watch heavily. Looking at the dollar, the DXY, the dollar index, which I heavily look at to determine gold. I think that, I'm looking at this trend line here. Could we, and I have a few questions, because it's really sold off, lately since about April. And this is really going to be very important because what the dollar does here is going to determine if this starts really getting a huge bump up, the dollar strengthens. The Fed signals things that, improve the dollar. People are selling out of Bitcoin. People are selling out of stocks. People are selling out of other things. They're scared. They're panicking. They want to have cash and hoard cash for things. Real estate is all another, possible bubble. Likely bubble, probably. That could burst at some point. Who knows? This has the potential. It still has the potential to hit off this trend line. We've seen multiple touches. It's been holding. Let's zoom in a bit. This is really going to determine a lot. I'm looking at this. It's been in a bearish trend. As you can see, this is going to have to look at the trend. The big question is it going to break down? I think around 90 is really where it is, which is sitting at right now. That's really important. If we get a sharp continuation, yes, this can keep going, and it could, believe me. I mean, even if you look out on a very long-term perspective, I mean, historically, this still can keep going down. As I was saying last week, it could, but then again, I wouldn't be surprised if it does get a bounce. But it's all gonna trickle down to what the Fed does, what the market interprets. If there's a lot of fear and panic, sometimes it helps the dollar. Are we going to see rates increase? Are the treasuries starting to pick up? Where's the money going to flow? Money has to flow into some place. But I'm not going to overthink this right now. I'm really just going to, keep an eye on this. If I see a sharp move or a continuation in the DXY, then I can get it going. But I still see this. This is still pretty bearish. This is, yes, it's getting a bit oversold. But this is still a downtrend. It would have to really break. It could come down, then break here. But I think it would have to do something like this and then break out, from this very established downtrend that it's been in since about, early April. That would be the real catalyst to gold starting to fall, silver falling, the tech stocks falling too, possibly other things starting to fall. So let's look at last week. So was I right? Were we right? This is what we drew out before. This was on May 9th, and as you can see, we've been pretty right. It did continue within this on our expectations, these uptrend. A lot of people were thinking it's going to just, and I was prepared for that scenario, but I don't want to short it when it's just so established. I know I saw a lot of people, looking at, the just coming down, but this is so strong and established. now we're really targeting, the 1950 level possibly, and then the all-time high level possibly. That's still in play, right? But it's all going to depend. I'm not going to overthink that. I really need to see it, in action with what the dollar's doing and the strength of the dollar, because that's really what moves gold. And if Bitcoin's also falling and everything, people might be exchanging a lot of that for actual metal. The money might be flowing back into that. It's possible. I think if Bitcoin didn't have its huge rally, I think gold could be a lot higher by now. I think a lot of money went into that because people were chasing higher gains. But that's a different story. So I've prepared 3 scenarios that I'm going to look at, because we don't overthink it. We don't get too hung up. We plan it out, and then we have catalysts and triggers that go into our trades. So the first scenario is just the most bullish one. Let's say the dollar breaks down below 90, right? Breaks, just starts to plummet, just keeps continuing this trend. And it could retrace up and then come down, but let's just say it just starts to just tank, starts to just move down very quickly. So let's look at the 3 scenarios that we're preparing for this week. So scenario 1 is the most bullish scenario. So you should always have like a high scenario, a mid scenario, and a low scenario, which means like the most bullish, the one in the between, and then the bearish one, right? So that way you're just neutral, and then you don't get too attached to an opinion. But overall, look, we know we're in an uptrend for gold, so we're mostly more long. So we should probably run more scenarios for long than short, but still, we got to be prepared for the downside. So let's just say the dollar at the beginning of the week is really just falling low. We're looking at treasury yields dropping, the DXYs just releases for the dollar just flowing in that way. And we just see the price of gold just ticking up. I also look at other major dollar pairs and see what they're doing as well. In that scenario, yes, I think it's quite possible for us to push up to 1950. From 1950, I don't know. It's a little bit of a gray area, because from that point, I think it's going to trace down a bit, even if it's very strong. So we'll have to see from there. I really would. I think it will pull back before hitting 2000. I just think that area is pretty strong, because it did reverse there strong in the past before. So I'm a little cautious about that. So the second scenario is, I think this is the most realistic one, is we have a pull down, we come down, and this area, this old volume pocket, because we've been in a very congested area. If you see all these volume profiles, we've been tracing from VPOC to VPOC to VPOC. I think it could come down to this VPOC in the 1850s. I think that area, and then we wait for like a wick, some confirmation, some consolidation. We start to see the price tick up. Then I think we have a pretty good risk to reward. We can put our stop loss, like 1842, 1840, around there. So then we would have a nice risk reward. If we're really right, we can really ride this up to 1950 still. I think we could take a little profit here, take a little bit of profit as it gets closer to 1900, and then the rest, that's good risk to reward. It's all about that, In the last scenario, let's just say the dollar just starts to strengthen. Let's say that this thing just, it gets a motor on it and heads all the way up, starts breaking out, strong. In that scenario, yes, I think it could break, definitely below, the 40s, 30s. It could keep coming down. It could then even go down to where its low point was. I think that it's, if this trend breaks, and the dollar's really starting to strengthen, and it's going to get it could get still ugly for gold. But overall, this trend, I'm going with the trend mostly. But I'm prepared for that scenario, right? So, that's really where we are for gold. Another thing I'll just look at is stocks. You just see when stocks are doing the S&P. I'm noticing it's at we had a little bit of a double bottom here form. We got a push. So it's really, really, really important. I'm also going to be looking at the SPX or SPY. Really, it's starting to wane a bit on some of these time frames. I think that it's quite possible that we get another. If we get another here, and then another rejection, I think we could definitely really start to break down pretty quickly, just with these candles that I'm seeing, and this type of price action that I'm seeing. I think we have to really get a pretty nice move up pretty soon, and we have got to break 4,200 pretty soon. If we don't break that by the middle of next week, and we're just really just hanging out here, I think we can. I think we have a drop, and this thing has been up. Everyone's been saying this forever, but the S&P has really been overextended for quite a long time. The monthly candle is a bearish hammer, but we'll have to really see how it reacts. Does it start to really pump up? If it starts doing this, pumping, and it starts to break, okay, then it could pull back, then come back up. But I think it's a little bit better to be on the bearish side for S&P right now and kind of just see what it does. But that's, again, it's all going to come back to what does the market interpret everything? That's all the data. What's going to happen? But mostly I'll be trading gold. Really just want to see, are we going to get to this 1950, which is very possible, I think. And then do we get to all-time highs? Or do we, we can even get to 1950, then it's all going to depend on the strength of the dollar, what the dollar does. This game, it repeats itself, and that's how you can become profitable. All right, well, I hope this video helps. If you like it, just give me a like, comment. If you have another opinion, everything's welcome. All opinions are welcome. All right, thank you so much, and let's have a profitable week.